Welcome back to this session on the Insolvency and Bankruptcy Code, and we're now down to the last few regulations. We're going to talk about the Voluntary Liquidation Regulations. These regulations are called as the Voluntary Liquidation Regulations, made under Section 59, 196 and 208, read with 240, which is the power to make regulations. If you recollect, Section 59 was the only section on this code that spoke about voluntary liquidation. It's just one section. So please remember this section 49 is the only section for voluntary liquidation. These regulations are called as the IBBI Voluntary Liquidation Regulations 2017. And they come into effect on 1st April 2017, which is just like your IU regulations. Same date. Applies to the voluntary liquidation of corporate persons under Chapter 5 of Part 2. Liquidation commencement date means the date on which the proceedings for voluntary liquidation commence as per Section 59(5) of the Act. So 59(5) is the voluntary liquidation proceedings in respect of a company shall be deemed to have commenced from the date of passing the resolution under 59(3)(c), which is the shareholders' resolution followed by the creditors' resolution if there are creditors. In terms of a quick brief on the voluntary liquidation process itself, first of all, you had to get your financial statements, which is your audited financial statements and record of business operations for 2 years and a report of a registered valuer. Then you would have a director's declaration of solvency given. Within 4 weeks of that director's declaration, you would have to have a shareholders meeting and get an approval. And within 7 days of that shareholder meeting, you will have to have a creditors meeting if there are creditors and liabilities. And then you will have to file with the board the resolution that which got passed in the shareholders or the creditors meeting. And they shall notify the ROC within 7 days of such process. And then the winding up process actually commences. If you had noticed, that resolution was supposed to be passed by a majority of directors. That declaration was supposed to have been given by a majority of directors. And I made a point there. I said if you notice in the Act, it only speaks about companies and hence directors. The same equivalent to the operative section, which is the declaration affidavit, is contained in the regulation for LLPs. So it will say that the declaration from majority of designated partners and individuals or individuals in case of other corporate persons. So while the Act provides for companies, the regulation provides for that basic process for corporates, other corporates, and for LLPs. Otherwise, it's pretty much the same thing. And notification again to the registrar or the board within 7 days. Now, this is what we got covered in Regulation 3, which is the initiation of liquidation for LLPs and other corporates. Then we go to effect of liquidation. The corporate person shall, from the liquidation commencement date, cease to carry on the business except as required for beneficial winding up of the business. Notwithstanding the provisions of subsection 1, the corporate person shall continue to exist until it is dissolved under 59(8), which is that the adjudicating authority shall, on an application filed by the liquidator stating that all the affairs have been completely wound up, then they shall pass an order that the corporate debtor shall be dissolved from the date of that order. Then we come to appointment of liquidator. An insolvency professional shall only be appointed as a liquidator. However, if he does not satisfy the eligibility criteria under Regulation 6, he cannot be appointed as a liquidator. A resolution passed under 3(2)(c) or 59(3)(c), okay, as the case may be, shall contain the terms and conditions of the appointment of the liquidator and the remuneration payable to him. So 59(3)(c) speaks about basically 59(3)(c) speaks about the shareholders resolution. So this regulation basically says that the fee shall be determined by the shareholders in that meeting, or rather the shareholders. Eligibility for a liquidator, he has to be independent of the corporate person. I'm not going to go through this again because this is the same definition under the corporate insolvency resolution process. Eligibility as independent director, not related to the corporate person, employee, proprietor, partner, audit firm, legal firm. And he shall disclose any pecuniary interest that he has with the entity as soon as he comes to know about it. And similarly, if any of his other partners or directors of the IPE are involved with any of the stakeholders, represents any other stakeholder in the liquidation process, then he cannot continue as the liquidator. Powers and functions of the liquidator. That's chapter 4. And before that, there's a very, very important regulation. Please star it. The remuneration payable to the liquidator shall form part of the liquidation cost. Powers and functions of the liquidator. Liquidator shall prepare 4 reports: preliminary report, annual status report, final report, and minutes of consultation with stakeholders in the manner specified under these regulations. Now let's move to a question and answer format just to make this session a little easier. Who shall the liquidator make available these reports? To any stakeholder. Who is a stakeholder? A person entitled to the distribution under section 53, the waterfall section. How shall the liquidator make this report available? In physical or electronic form? What are the safeguards that the liquidator needs to take before he gives this report? He shall ensure that the stakeholder has given an application in writing. He is provided for the cost for making such a report available, and undertaking that he shall maintain confidentiality and shall not use this to cause undue gain to himself or undue loss to somebody else. What is the first report to be submitted by the liquidator? One of the first reports that need to be submitted is a preliminary report. When should a preliminary report be submitted? It shall be submitted within 45 days from the liquidation commencement date. What shall the preliminary report contain? Capital structure of the corporate person, estimate of assets and liabilities, whether he intends to make any further inquiry relating to the promotion, formation, management of the company, and the proposed plan of liquidation, including the timeline. All this I am questioning from regulation 9. Now, in the preliminary report, he had to give an estimate of the assets and liabilities as on the liquidation commencement date based on the books of the corporate person. What happens when the books are not reliable? Where the liquidator believes, for reasons to be recorded in writing, that the books are not reliable, he shall also provide such estimate based on reliable records and data otherwise available to him. Then, registers and books of account. What happens when the books of accounts of a company in liquidation are incomplete? Liquidator shall take efforts to bring it up to date with convenient speed. What are the books of accounts to be maintained? Registers and books that need to be maintained by a voluntary liquidator under the voluntary process. Cash book, bank book, ledger, fixed assets and inventories register, securities and investments register, register of book debts and outstanding debts, tenant, suit, decree, claims and dividends, contributories, distribution, fee, suspense. Please star suspense. Documents, books register, unclaimed dividend, undistributed property, such other books and registers as may be necessary. Is there a format which is specified for all these registers? Yes, there is a format. It is specified in Schedule 2. with such modifications that the liquidator may deem fit. Liquidator star shall keep receipts for all payments or expenses made incurred by him, which means he has to have the vouchers and everything with him. We move to regulation 11. Can the liquidator engage other professionals? Of course, the liquidator can engage other professionals to help him to discharge his duties, obligations and functions. Can he pay remuneration? Yes, he can pay remuneration. Is the remuneration a part of the liquidation cost? Yes, it is a part of the liquidation cost. Who cannot be appointed as a professional to assist him? Where is a relative of the liquidator, related party to the corporate person, or has served as an auditor during 5 years preceding the liquidation commencement date. If the person after appointment, or rather no, what are the safeguards here? Before appointing such a person, he has to obtain a disclosure whether he has any pecuniary or personal relationship which is not permitted under this regulation. Consultation with stakeholders. Can I consult stakeholders as a liquidator? Yes, I can consult stakeholders as a liquidator. Is there any format in which I have to maintain those consultations? Yes. It shall be documented in Form A. Extortionate credit transactions. I am not covering it again. We've done this earlier. Same definition. Exorbitant payments. Highlight. Unconscionable. Highlight. Public announcement by liquidator. Public announcement shall be made in Form A. Okay. Within 5 days of his appointment. And consultations with stakeholders. I think there is a format which is only prescribed for compulsory liquidation, not in the voluntary liquidation format. Here it basically starts only with public announcement, which shall be made in Form A of the Schedule 1. Public announcement shall call all the stakeholders to submit the claims within 30 days from the liquidation commencement date. Where shall the announcement be pronounced? Announcement be made? Same. Website of the corporate debtor, website designated by the board, one English, one vernacular, registered office, principal office, and place where he conducts material business operations. It's identical. So, last date for submission of claims is 30 days from the liquidation commencement date. With this, we'll stop here and we'll move to the next chapter, which is the chapter starting with claims, which is chapter 5.